Right. So welcome everybody to day 2 of Back to Trading School, the year 2022 with SimplyPips. Yesterday, we looked at the nature of risk and a brief on trader psychology. Today, we'll be looking at the fundamental on our strategy development and design. I won't be assuming that everybody here knows about trading. I will go to the rudiments, so it might seem basic for some of you, but within the 70 minutes or so, we will be discussing this. We would quickly move it to an advanced level, so pretty much everybody can glean one or two things. And don't miss out tomorrow, because today will just be fundamentals. Tomorrow we'll be going into one of our strategy, the high probability, low risks. We'll be looking at the trade and the flow plan of that strategy. So ladies and gentlemen, as we continue today, like I said, we're looking at the fundamental of our strategy, and I've been able to put them down in easy to understand points. I don't want to make it look like PowerPoint today. As traders, we only make money. We only have the opportunity to make money when there is a change in price. We only have opportunity to make money. Just a minute, please. Just a minute. So we only have the opportunity to make money when there is a change in price. So let's say you want to trade in gold, which is AU for the science students, and to make it meet the convention for Forex, we put XAU, then USD, just to make it have 3 letters and 3 letters, like GBP USD. Kindly mute out yourself. Prof, help us see if we can mute out everybody at once, then we'll give room for people to unmute much later. All right, so if the price of gold, let's put an hypothetical number, is $1,230. It will remain, if it remains at $1,230, what happens is that you just have a straight line with this being price and this being time. If there is no change in price over time, there is no opportunity to make money. No opportunity at all. The price yesterday, or at 12 noon, is exactly the same as the price at 8 p.m. and it remained the same all through from 12 to 8. Not that it went up then came back. It remained the same all through from 12 noon to 8 p.m. No opportunity to make money. However, if price made something like a sine wave during that time period, now you have an opportunity to make money, because you could have bought it at 1,230, and then when it came up to 1,500, you sell. Or you could have bought it at 1,100 when it came to the trough, and when it came to the peak at 1,500, you sell. Or you could have bought even at 1,100 and sell it off at the starting price of 1,230, and you still would have made profit, right? So we don't have an opportunity to make money when price is fixed, none whatsoever. So that's point number 1, simple, straightforward. We only make money when we can correctly predict where price will go, and sometimes how far it will go, depending on the type of trading being done. Yep, so explain again. We only make money if we go back to our graph of price against time. If this is the startup price, if price at this point is 1,230, and you predicted that this price will continue to go upwards. If price continues in its upward trajectory, and your prediction was that it was going to go upwards, you make money. If price makes a U-turn and begins to come down, and your prediction is that price is going to come down, yeah, you make money. But if you predicted price was going to go up, and then price came down, you would lose money, right? So we only make money if we can correctly predict the direction that price will go, either up or down. And sometimes, depending on the type of trading you are doing, the amount of money you make also depends on how far you think, how correctly you predict how far price will go to. So let's say you came in at 1,230 and you predicted that sometimes within a period of time, price will reach 1,430, right? If price eventually moves to 1,430, then you make money for some form of trading. Some other form of trading, things like binary options, you don't really need to add the extra burden of determining how far price will go. You just need to be right as to the direction, whether up or down, and then you make money, right? So our job as traders is correctly predicting the direction that price will move if it changes, because that is only when we make money. When there is a change, there needs to be a change in price for us to make money. And now we want to determine if the change in price is going to be upwards or downwards. So let's move on. So there's a big debate. There's a big debate as to the predictability of price movements or the lack of it, right? Some persons believe that price can be predicted and that price follows a rhythm, right? And some other persons believe that no, it is completely haphazard, right? If you've ever played this puzzle where there's a start somewhere and there is a stop somewhere, and then you find some things like this, you know, there will be some false leads and some correct ones. Eventually, one of them will lead to the right exit. Now, some persons believe, just like with price, that this thing is actually haphazard. And some persons believe, no, it isn't haphazard. There is a way you can predict exactly where price is going to. And that is the, I'm tempted to say $1 million question, but $1 million isn't that big. That is the quintillion dollar question. Where would price go to? And is it predictable? Right, so here on my screen, I have a tool we could use to simulate present price movement in the market. And I want to do an exercise with us just to get us involved in all of this. So right before your very eyes is the chart of AUD/USD in the past. And I want us to do a small exercise right now. 1 minute. Let's take out something out of this. make it neater. Okay, so here we have this line, and I'm going to put another line here, right? And this is my startup point. The red line there is my startup point. And I'm going to ask a question. I want every single one here to participate. When price reaches, okay, let's change the color so it becomes easy for us to call them by the color. So we have blue, and we have pink. So price is presently at the blue line and sitting on the red price. The blue lines delineate time. The red line delineates price. So this is a chart of price against time. When price eventually gets to this time, the pink time, I want you to put in your chat box if price would have gone upwards or if price would have gone downwards. So put U for upwards, or simply just type up or down. I need to see it in the chat box. Let's get busy right now. Put in the chat box. By the time price approaches that pink line, would it have gone higher than where it is now, or it would have gone lower? Put your answer in the chat box, up or low, up or down, up or down, up or down. I need to see participation, guys, except of course you are driving. Up or down, or you are sneaking to join this Zoom in the office. All right, everybody is saying down except Mr. Olatunde. Mr. Priye simply says, I don't know. No sitting on the fence. Can't determine that. Well, all right, let's see how it goes. Uncertain. All right, let's play this and see. Let's see where it will go to. All right, the guy saying down, well, up seems to be having it right now. Up seems to be winning. Oh, sorry, down seems to be winning. Sorry for the up guys, and we had many people saying up. Down seems to be having the bragging rights. Sorry for you guys that said up. So sorry. But let's see. It is not over until it is all over. It is not over until it is all over. Somebody is just typing down now after we've seen it going down. No further votes are needed. No further votes are needed. All right, let's see how it goes. Is it going down or is it going up? Well, it still seems like it is down. Let's see. We're almost at the finish line. We're almost at the finish line. Almost at the finish line. And ladies and gentlemen, oh, the down guys won, right? If I go down, if I go to our chart, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 votes for up and only 3 votes for down. Now you understand why Forex looks easy, but when you get involved, you lose money, right? Majority, about 70 or 80% said it was going to go up, and lo and behold, right before our very eyes, it went down, right? So that's the big problem when it comes to trading. Some persons believe that price can be predicted, and some believe that it can't. The guys who said price was going to go up, I am almost very, very sure that some of them would have marked this up like this, and they saw something that looked like an uptrend and buy every stupid book on the internet, price should continue to go up. Lo and behold, price didn't, because price doesn't obey a line you draw on your chart. Mark Douglas gave a very interesting story in his book. He mentioned somebody who had been a trader, but not a technical trader. He practically trades in soybean and other commodities. And I think if I remember the story right, he retired or resigned or something like that, and he just didn't feel like sitting at home. So he wanted to go, just keep himself busy. And he was employed by another trading company that were, practically technical traders. And he was made to understudy somebody who was seen as a guru in technical analysis. And the guru looked at the charts, and when he looked at the chart, he added up some indicators, looked at some technical things, and said with very, very high confidence that price isn't going to go below this point. This is the low of the day, right? And when he said price isn't going to go below this point, the apprentice, who of course is an experienced trader, but just a different type of trader, told him, "Are you sure this is the low of the day?" And he said, "Yes." He said, "Okay, give me 1 minute." He placed a call to somebody who owns large reservoir or reserve of soybean, and he says, "Please, can you put that soybean in the market now? Sell it off." And they sold off that soybean. And price, which prior to this time had been finding it difficult to break this level, just went down because there were more sell orders in the market, and price went down. And he went back to his guru and said, "Where did you say the low of the day was again?" Obviously embarrassing that guy, right? So the debate rages on. Is this, is it predictable or not? Some persons like Michael of ICT believes that price follows an algorithm. So he called it the IPDA, interbank price moving interbank price delivery algorithm, right? And that price follows that chart. Yeah, if you follow him, it will look like it's almost true. And if you follow some others who believe price can be predicted, and that it's actually a haphazard, because anybody in the world can just say anything or do anything and price will move. Like nobody could have predicted the massive dump that happened when Russia threw the first bomb into Ukraine. Nobody could have predicted that, so they say price is not, I mean, you can't, it doesn't follow a strict regime. The debate rages on. But for me, I believe that price is predictable in an unpredictable market, right? It is predictable in an unpredictable market. And the predictability I'm talking about isn't 100%. I'm not talking about predicting price 100%. If anybody knows how to do that, that person will be the biggest investor in the world, and it won't be, and it will be well known, right? So the next point here is, sorry, the next point here is common ways to predict is to look at the past, or we call it the left-hand side of the chart, right? Even though there is a big debate as to whether we can really know what price will do, whichever side of the divide in the debate you belong to, you still have to draw your conclusions by looking at the left-hand side of the chart. So this is a chart right now. Sorry. This is a chart right now. Sorry, please. Yeah, this is a chart right now. And if I need to do anything, I should be able to determine what I feel I want to do by looking at the left-hand side of the chart. And when I say left-hand side, is not symmetrical. I'm actually saying from this pink line. Everything left-hand side of that pink line is the past, right? Is the past, right? And everything in this blank area is the present. So the common way to predict is to look at the past or the left-hand side of the chart. And when you look at the past or the left-hand side of the chart, you can, we call that data, right? Anything that's happened in the past becomes a data. So you look at the data, you study the data, you observe the data, and you can go ahead to look for patterns, right? Some persons look for patterns. They see patterns like, let's go to TradingView right now, right? So there are different patterns some people have looked at. Some people look at the patterns, and what they see is a harmonic pattern. They see an harmonic pattern, and D marks the point. If D is below, you're anticipating to buy. If D is above, you're expecting to sell. And they have different patterns like shark patterns, butterfly, kangaroo, Shrek, or different type of patterns that people find, right? Some people go there, and rather than see these ABCD patterns, some of them see the Elliott pattern. They see higher highs, higher lows, higher highs, higher lows, and they see that kind of pattern. Some go ahead to see other forms of patterns. Some see cyclic times, believe it or not. Some see cyclic times in when you're looking at consolidating markets. Different kind of patterns. There's a common one that some people just like using. Let me see if I can find that for us. Where are you? Yeah, some people see head and shoulder patterns, right? Some people see head and shoulder pattern where the top of the right shoulder marks the spot where you want to trade. Some people go ahead and see trends. They see trend lines. Where are you? Yep. Right. Some people see trend lines. Let me just draw that from here. Some people see regression trends. Some people see normal trends. Some people see, believe it or not, some people see angles, right? Some people see retracement into fibs, and therefore they have Fibonacci's, right? Like we have in the AQZ fib. A lot of patterns. Some don't even use this at all. They see patterns where price extends beyond a particular point. Let's come back to MT4 and let's add an indicator here. We're going to add an oscillator, and we'll put the stochastic oscillator, and then we'll also add another oscillator, a very common one, the relative strength index. Right? Some people use this and they see patterns in all of this, right? You notice that when price goes above, and I'm talking about the stochastics, when it goes above the 80 line, it seems to be coming down, and then it stayed a little, then began to go up. Some people use all of that. They call it overbought, oversold. They are all patterns, guys. And everything they are looking at is the left-hand side of the chart. Everybody is focusing on this side of the chart, right, to determine their patterns. They look at the left-hand side of the chart, right? All right, let's move on. So some people even look at fundamentals, the effects of fundamentals. Okay, January 2020, there was an increase in interest rates by the Feds, and when the increase came up, something happened. Or there was a drop in the non-farm payroll numbers, and therefore something happened. So people look at that, right? And in using fundamentals, part of it you contain what they call sentimental biases. You have commitment of traders you have open interest, you have interest rates, decisions, you have several things. Some people look at divergence as a pattern. There are different patterns you could look at, right? Some people look at candlestick patterns where they see spinning top, doji, gravestone, different kind of patterns. They are all looking at the past, right? Now let's go back to number 5. Or rather, still the later part of number 4. No matter what you do on the left-hand side of your chart, you will only make money from the right-hand side of your chart. So no matter how good you are in analyzing this left-hand side of the chart, you only make money from the right-hand side of your chart, right? If you can explain to the whole world, right to the pip, what happened to the left-hand side of the chart, and when you are faced with the right-hand side of the chart, you are lost, you remain lost in the market, right? If you can explain the left-hand side of the chart, and you can't put it in practice when it comes to the right-hand side of the chart, you remain lost in the market. Right, so let's move on. So if 1 above is true, that is, price, we only have the opportunity to make money when there's a change in price. Price has only 2 ways it can move to give us money. It either goes up or down, and that is a given. We don't need to explain that. So if 4 above and 5 are true, if 4, which is common way to look at it, is by looking at the left-hand side, and 5, price goes up and down, are true, we need to know where we are in the market. We need to know our present location in the market to be able to determine if we predict up or if we're to predict down. And let me explain that. We know that we only make money when price goes up or when price goes down. That is when we make money, right? So if I pick this now and I stop here, the question is, am I up or am I down at point A? Right? I want you to put your answer in the chat box. Am I up or am I down at point A? Put your answer in the chat box. Are we up or are we down at point A? Just like with the other exercise, a lot of people and practically everybody is saying we are up. Thank you. All right, so let's see again. So from point 0 to point A, we say we are up, right? All right, I'm still getting feedback. We are still saying we are up. Oh, great. So now is point A up or point A down? Is point A up? Those of you who shouted up, up, up. Is point A up now or is point A down? I need participation, guys. If you responded up, I want you to respond now. Is point A up or point A down? All right, some persons are telling us it is still down and some are still saying it's up. And my answer will surprise you. Both of you are correct. Both of you are correct, right? Point A is up with reference to point 0, but down with reference to point CDE. Up in reference to point O and B, down with respect to CBD or CDE rather. So the question is, where are you in the market? The guy who feels point A is high may take a different trading decision from the guy who thinks point A is low, as at the point that point A was formed. And I'll give you a common example with what happened in Nigeria recently, and it's still happening in Nigeria. I have I was to visit some family members in the northern side of Nigeria. Usually a flight will cost me within about 28 to $36,000, naira, depending on how close to the flight day I book the flight. And I thought, well, no need booking it. By the way, I'm not too sure of the exact day I want to go. I just know I'm going to go before the end of the month. And one day I woke up and I saw in the news that flight is almost now flat price at 50,000 naira. That is over a 30% increase in the flight ticket. The question is 50,000 high or low? Right? For some persons, 36,000 is high already. 50,000 is a no-go area. Just today, somebody told me that some flights has been canceled and that flight tickets have gone up to as high as 120,000. And the first question I asked myself is, do I still want to travel? But you might be surprised, for some persons, 120,000, if the story is true, is still low, right? So you need to know exactly where you are in the market. Are you up or down? But you cannot say up or down if you don't compare with something. There has to be something that you are comparing price to be able to say you are up or down. If I get a dot right now and I draw this shape and I ask you that, is this shape up or down? An intelligent answer will be up or down with respect to what? Up or down with respect to what? I mean, the shape is just there. But if you're asking me up or down, the question is with respect to what? If I put a horizontal line here, then the question makes sense now. It is up with respect to the horizontal line, right? So the biggest problem I have found in my own experience trading the market is locating where I am in the chart. Because on very rare occasions, do we have instances that we are in a global top? On very rare occasions, do we have instances that we are in a global top? And even in those rare instances, it occurs in very few asset class, like cryptocurrencies, like stocks. You rarely see that happening in currencies. I am presently sitting on the chart of BTC USDT. If I go to the present price, you would see that the global top of Bitcoin, as shown on this chart, let me bring up my sniping tool. Right, it's around $68,729.06. Right, so this is a global top. This is the highest that Bitcoin has gotten to. So I could say the present price of Bitcoin is down. I might be saying that, but the question is it really down? I'm only saying it is down with respect to the highest price, the highest price ever. But for me, as a trader right now, Bitcoin is up. I'll be more open to selling Bitcoin to these levels than I will be to buying Bitcoin right now. So with respect to that line up there, the peak, the global high, we will say it is low. With respect to what I anticipate price to do, that Bitcoin is going to drop to around 29,000, and there I'll be having my buy limits, price is still high. So the question is, what is high for somebody is low for another person. That is the biggest headache in trading. Where are you? If I go to currencies right now, If I go to currencies and I pick up NZD JPY, remember I said on rare occasions would you see a global high or low? Very rare occasions, and they will happen in newer assets like cryptocurrencies, and assets I feel are always growing, like in some stocks. But in currencies is a big different kettle of fish. This is NZD JPY. Let me hide some of these things, guys. Let's hide this thing so we see our charts clearly. All right. So this is NZD JPY, and let me go to the weekly time frame so it just gives us an idea of where we are. Presently, I can't say based on the weekly whether NZD JPY is up or down. I can't say. It's in the middle of nowhere, guys. It's in the middle of nowhere. And you could do that for almost every currency. Look at that. How would you trade GBP AUD? It's in the middle of nowhere. Right? How are you going to trade GBP USD? It's in the middle of nowhere. So this is the biggest and the most fundamental problem that traders need to solve. Where am I in the market? Where am I? Right? The biggest problem is number 5 or number 6. If 4 and 5 are true, sorry. We need to know where we are in the market, the location, to be able to determine if we predict that we'll continue to go up or down. Now I'm going to ask a question in the chat box, and I want you to please put your answer in the chat box, especially for those of us who are new to trading. If price is to go up, what would you do as a trader? Put your answer in the chat box. If price is to go up as a trader, what would you do? If your prediction is that price is going to go up, what would you do? Put your answer in the chat box, especially if you are new to trading. If price is to go up, so Donna said sell, Uche says buy. If price is to go up, what will you do? Daniel say I will buy. I don't want to see comments from guys who have gone through the fostering program. You guys are lecturers on your own. So if price is to go up, what would you do? Would you be thinking of buying or thinking of selling? All right. If price is to go up, I need few more answers. You wait for the test. Chai, this guy is a professor. If price is to go up, what will you do? Will you buy or sell? Somebody say buy stops. If price is to go up, if price is to go up, what will you do? So I'm going to rephrase my question. Wait for a pullback. We have some very serious professors in this class today. I'm going to ask this question in a different way, right? Okay, so here it is. You are a merchant and you are in the business of selling vehicles. Right? You are in the business of selling vehicles. You have 1,000 in your car lot. 1,000 vehicles in your car lot, and for one reason or the other, they happen to be the same brand, right? A BMW. You usually would buy this BMW from the manufacturer at the cost of $50,000 US per piece. Then you got a call from a friend who works at the manufacturer's location, and the friend put a call through to you and says, hello, Bob. The price of BMW per unit will go up to $60,000 by next month, what will you do? One, to new purchases. How will you react to new purchases? As in, what will you do about that information? Would you buy more or sell? Then number two, what will you do to the 1,000 you have in your car lot already? If you want to answer this question and you are new to trading, please raise up your digital hand. If you're in a quiet place, I will mute you and you talk to me. Or you could as well put your answer in the chat box, of course. What will you do? All right, Moses, you can unmute yourself and talk to me.
Hello.
Yeah, I can hear you, Mr. Moses.
What I will do is that the new one, I will not buy more.
You will not buy more?
I will not buy more, but I will sell the old. I will wait the next one to sell my own one, to gain.
Okay, so let's
Hello, sir.
let me put a twist to this question. If the was to sell it at 60,000 and make 10,000 in profit, right? So what will you do now? What will you do now?
If I sell it to 60,000, that means I will sell now.
So if all right, thank you. Don't worry. Infinix Hot 11 Play, wonderful name. Please unmute yourself and let's hear you talk to us. What would you do?
Good morning, sir.
Good morning, sir.
Yes, sir. I will buy more, then I will sell them.
You buy more now?
Yes, sir.
All right. What if somebody comes to you now and wants to buy from the 1,000 you have? What will you do?
Sir, I won't sell.
You won't sell?
Yes, I will keep it and wait.
You keep it
and wait.
And all right. And yes, how much will you sell it when you wait?
60,000, sir. 60,000 USD.
Very, very good. If you sell it 60,000 USD, how much profit have you made?
10,000 USD, sir.
Thank you very much. Prof, do you want to respond to that? Do you want to respond to that? Is Prof in a place where he wants to respond to this? Or I should go ahead? All right, let's move on. Okay, thank you. All right, so yes, thank you for those who participated. Let's quickly look at the chat box. Somebody said, I will buy more and increase my selling price. That is Mr. Uche. That is a businessman we are talking about here now. Buy more so I can sell at the new price. If you sell at the new price, you will not have gained, Mr. Daniel. I will buy more and sell after increase. I will be patient. Sell what I have as it may be an old model. Come on, this person is thinking outside the box. All right. Now, the correct answer should be that you buy more, right? Let's not overthink this. If you know the price is going to go to 60,000, you buy more now. You go add like 1,000 cars more, right? Because you'll be buying it at 50. And then you know that when the price goes to 60, right? The market price will no longer be 60. You bought it at 50, you're planning to sell at 60. If you are going to buy at 60 from the factory next time, you should be planning to sell at around 70. So I'm going to buy now at 50, and then next month I'll sell it at 70. Those of you who said you sell it at you sell your old stock at 60, you are not making any profit. If you sell your old stock at 60, you use that same 60 to go and buy a new one. You've not made any profit, guys. But this is not a business class, right? I just needed us to bring it back home to us. When we know that there's going to be a rise in price, we buy. We call it R&B, or rice and beans. When we know there's going to be a rise in price, we buy. And the opposite, of course, is true. When we know that there's going to be a drop in price, we sell. Right? That is the law of trading. When there's going to be a rise in price, you buy. When there's going to be a drop in price, you sell. If you know that price is going to rise, if this is the flat price is 1,000, and you know that price is going to go up, it means this price where you are now is a discount. It means you are buying it at a discount because very soon you know the price is going to rise up to 1,500. This is a discounted price, right? If you know that price is going to go down, you sell what you have now, right? If that car that you bought at 50,000, if you hear an information that the cost price of that vehicle is going to drop, you simply sell off what you have now before the price drops. If you know that there's going to be a drop in price, you sell it now. Why? Because discount is going to come lower. So where you are selling it now, the price where it is now becomes a premium, right? Becomes a premium. So you buy at a discount and sell at a premium. I repeat again, you buy at a discount and sell at a premium. You buy when price is lower, you sell when price is higher. All right, let's move on. This is back to school. So for those of us who are old guys, just be patient with us. All right, so we've been able to answer question 7. When price is going to go up, we buy. And when price is going to go down, we sell. And I've also explained the concept of discount and premium. There are other ways people look at location to see whether price is going to go up or down. They use what they call divergence, right? For you to be able to have divergence, you must have what they call a control. You must have a control parameter, a controlled parameter, or a control as the case may be. Then you now reference other things to that control. So let me give you an illustration, for instance. If I know the price of euro, and I also know the price of USD, individually, I know the price of euro and I know the price of USD individually, then I have a chart, a graph, where I draw the price of euro against USD. And the price of euro against USD is sloping, sorry, let me use a different color, is sloping upwards like this. Then I have a currency market where they trade pairs, not individual currencies. This first market trade individual currencies. Let's say I have a second market where they trade pairs. And at this point, the price on my own chart of euro against USD is 1.1. And in this market where they trade pairs, the price of euro USD is 1.0, right? It shows that there is a divergence, there is a difference between these two things. And technically, they should be the same. I could capitalize on this difference and buy euro USD in this pair market, anticipating that to eventually coincide with this at 1.1, and once it moves to 1.1, I get out and take my profit, right? So in this instance, when I say up or down or discount or premium, I'm comparing it against a control. I'm comparing it against something to determine if I'm high or low, right? The same thing happens with people who trade oscillators. So price is making higher high. You expect your oscillators to be making higher high. All of a sudden, your oscillator is making a higher low. So you can say that is a hidden divergence, regular divergence, fractal divergence, whatever. They say, okay, because price is because indicator is making price is making a lower low, for instance, and indicator is making a higher high, there's a divergence, then I'm anticipating that price will make a U-turn. Again, you are using a control to determine whether you are at a premium or at a discount. If you're a trader and you don't understand all these things I'm saying, you didn't learn trading properly. You need to learn them, and you find it difficult framing up your own strategy. You'll be reliant on other people's strategy. And if you follow what I said yesterday, a strategy that works for your mentor may necessarily not work for you. In fact, if I have my way to recalibrate the fostering program, we will only admit people that have the same temperament or similar temperament to myself and Prof. And from day one, after we've learned psychology, we will split into groups. People with Prof go and learn with Prof. People with Bishop go and learn with Bishop. That is all. So no point learning 3 strategies, then you end up not using one. Right? If your temperament, if you are a sanguine and your mentor is a melancholy, there is every tendency that you will understand his strategy, but you will not be able to implement it. You will not be able to implement it. If you are somebody who is a choleric, for instance, and I give you a strategy that prints an arrow, when the arrow is down, sell. When the arrow is up, buy. Your mind will just be asking, why is it up? So like in this meeting now, I have spotted somebody like Donna who always try to think outside the box. That person might find it difficult to just take a strategy that has up or buy. The person will be wondering, why is it up? Why is it down? You need to explain. Now, why you are doing analysis paralysis, price has gone and you have missed out on the trade. Then the next time you decide, okay, I won't do analysis paralysis, I will take the trade, you lose that trade. Then you'll be forced to come back to analysis paralysis again. Yeah, whereas there are some people, they don't mind, in fact, they are very happy that something is taking off the burden of thinking from them. If the arrow prints red, I sell. If the arrow prints blue, I buy. Any other thing you're explaining, they don't understand. Right? So if you need to understand that, if you don't understand everything I'm explaining right now, you will find it difficult to glean out of your mentor's teachings and then frame a strategy up on your own that suits your unique personality. Right, so let's move on. So location is not enough. We need to look for the best location. Best in italics, guys. Best in italics, because best is the relative term. Right? Best is a relative term. So it is not enough to say, I simply know that price is going to go up, or I am presently up. You also want to know the best time to buy. You want to know the best time to buy. So for instance, Bitcoin has been dropping. Let's go back to TradingView. Sorry. Yes, TradingView. Let's go back to Bitcoin. Let's go back to daily. Up. This Bitfinex isn't it. Bitcoin. Yeah, let's use BitSam. Ladies and gentlemen, believe it or not, when Bitcoin did this move, some people, I remember posting this thing in SimplyPips, and I mentioned that there was a possible breakout around here, but that on the daily we were still bearish, right? So I remember posting it. We've been selling Bitcoin since last year, even though some people have been forcing it to buy. Right? When Bitcoin made this move to the upside, believe it or not, there were several persons who went to YouTube, Instagram, and everything and said the alt season has started. Ethereum, Bitcoin to $80,000. Right? They felt this was the best place to buy from, or rather, they felt this was the best place to buy from. They felt that box was the best place to buy from. And shortly after they bought, all hell let loose. Price came down. Then there was this issue of what happened in Ukraine, somebody posting something, and boom, price went up again, and then it came down. Right, so aside knowing whether you should be buying or selling, you want to buy at a place where your loss, should you take a loss, will be minimal and can be measured. So there lies the second biggest problem. If you remember, the first biggest problem is knowing where you are in the market. Are you up or down? Are you up or down? The second biggest problem is how up is up and how down is down, if you understand that English. Right? How up is up and how down is down. That's a big problem for traders. And if your strategy doesn't answer these fundamental questions, you are gambling. And very few gamblers end up becoming rich. Most die poor on borrowed shoes and vests. How up is up and how down is down. Very fundamental, right? So location is not enough. We need to look for the best location. And again, best is a relative term. If you trade on 5 minutes time frame, your best location might not just be the best location for somebody trading on the daily. So best is relative. Number 9, how do we determine the best location is one part of the strategy. I just stated it not long ago. If your strategy doesn't answer the question of best location, then you don't have a strategy. Your strategy, even answering the question of best location, is just one part of it. Now let's go back to TradingView and break down this issue of best location and the likes again. So here we are. Let's go back to our impulse wave. So you have this move, and you've been able to tell yourself that whenever I see, okay, maybe before I do that, let me do this. You've been able to tell yourself that when I see 1 above 0, which we call a high, and 0 is a low, right? Let me just annotate for the purpose of those our friends again that are new to this. So this is low, this is high, this is a higher low, right? Because this 2 is higher than 0, but it's also a low compared to 1. So it's a higher low. Number 3 is higher than 1. But 1 is high, 3 is high. How do you separate? We call this a higher high, right? 4 is lower than 3, but it's higher than 2. So we'll call it a higher low 2. So 5 will become higher high 2. You've been able to postulate that whenever you see this pattern on your chart, you will be looking for reasons to buy, right? Because obviously you can now easily draw a trend line and say we are in an uptrend. The question is, you've been able to spot your location that you're in a higher high. But what is the best look? And because you are creating higher highs, your bias is that you want to buy, because it seems like price will keep going high. And if price is going to go high, you buy. The question is, where will you buy from? If you buy from the higher high 2, price may just come down. And then you'll be a loser because price came down. So where would you buy from then? So those people that are saying they wait for pullback, they wait for the test. Okay, now we're getting to your answers gradually. Why do you wait for the test? That's what I explained. So if you didn't know, when you see people like Prof or some other traders say we wait for the test, this is why. They don't want to buy too high. they would rather let the trade go than buy it too expensive. They would rather miss the trade than buy at an expensive price. They want it to come a little bit cheaper than it was. Then they can buy. Right? So if you've been able to establish, we are with number 9. Okay, location. We're talking about location now. So your location, you've gotten your location. What's the best place to buy from? Some person says, I'll wait for price to get to this trend line and then I'll buy. What if price gets to the trend line and as you bought, price pierces lower? Oh, so some people say, no, when price gets to the trend line, I still will not buy. I will wait to see an engulfing candle at the trend line, and then I will assume that the buyers have returned to the market, and then I'll buy. And some people say, no, we are not going to use only engulfing candles. We will use other bullish candlestick patterns. We'll use things like a bullish doji. We'll use things like a bullish inside bar. We'll use things like, many other things. You could determine. All you are doing at that point is ensuring that you narrow down your entry to a point that is specific and, recognizable in the market. So it is not enough to just say, I get the location. Let's clean this up. It's not enough to say I get the location. The getting the best location is just one part of the strategy, and we'll discuss that tomorrow, how we get the best location for some of our strategies. The next one is how to get in, right? So after getting the location, would you just enter? So because price came to the trend line, would you just buy? Would you just buy because price came to the trend line, or would you wait for something else to buy? It all depends. We have some strategies that we trade that we don't wait for anything, we just buy, right? So if we have an AQZ qualifying candles, once price break above, there's a way we buy. There are times price breaks above, we wait for price to come back to the PC before we buy. All of those are conditions. If your strategy doesn't have those conditions, you are gambling. And if you are gambling, you'll blow your account. It's just a matter of time. Number 11, getting it right with location is not enough. You must also think of getting out. You must also think of getting out. So because you have been able to narrow down to how to get in, that has not solved your problem yet. After getting in, you don't go come out, you have to get out. Right? And for me, there is a big debate, and maybe we'll create a debate in the group and invite 2 persons or 3 persons each to come and debate this topic. Not that there's any money to be paid for debating, but sometimes just to exercise our mind and get and laugh a little. Which is more important, entry or exit? How many times, and I want to ask you this question, I want you to put your answer in the chat box. How many times, and when I say how many times, I don't expect you to know. It's a rhetoric question, but the answer I want you to put is yes or no. Right? How many times have you entered a trade that went into profit before going into a loss to hit your stop loss? Right? If it has ever happened to you before, put a yes in the chat box. If it has never happened to you before, all your trades go straight to TP or straight to stop loss, put a no in the chat box. And anybody who puts a no will be the person that will anchor this session for the remaining 4 days. Because I want to learn what that person is doing, and I'm sure Prof wants to learn too. Right? Severally, Mustafa says several times. In fact, in my own experience, I usually see red once I take my trade. Immediately I take the trade, the first thing they show me is red. Then I will now go to one corner and be waiting to see if the red will finally change to blue. And the illustration I made yesterday, it has happened to me several times when I started trading. Sometimes I will get so tired, frustrated, I will go to my MT4 and I want to use my hand to pull, to drag, to increase, to push the candle. It will not push. It will not go anywhere. Right? So getting in is not a problem. Or rather, Getting in is one side of the problem. Getting out is the other side of the problem. How would you get out? Right. So you see some people say that, oh, my stop loss is 30 pips. Oh, or maybe I'm jumping too fast. How do we get out of a trade? Let me ask that question here. How do you get out of a trade? When you take a trade for, let's say, a buy. You take a buy here. If you take a buy at this level, how would you get out of the trade? Traditionally, we would have something up there we call TP. And we have something down here. Sorry. We have something down here we call SL. TP is take profit and SL is stop loss. When you enter a buy, the only way you can be delivered from that trade, the only way you can get out of that trade is by a sell. When you take a buy, let's take Euro USD. When you buy Euro with USD, it means that you are selling USD to buy Euro. The only way you can get out of this trade is to do the reverse of what you did. You come up here and do Euro, USD, Euro, USD, Euro. If you are seeing it as a buy, and if you are seeing it as a sell, you will sell Euro USD, which is the conventional way of looking at it. You sell Euro USD. That's the only way you can get out of a trade. When you buy, the only way, when price hits your TP, what you are doing is selling. When price hits your stop loss, what you are doing is selling. Right? So you bought a car. You bought a car, right, at 50K. The only way you can say you're in business, because when you do a business, you can either take a loss or a profit. If you take a profit, it simply means that you ended up selling the car for a price higher than 50K. If you take a loss, it means you ended up selling again the car at a price less than 50K. But what did you do? You actually took a buy initially. But the only way you can get rid of this car, that is the only way you can get out of this business or out of this trade, is if you end up executing a sell on any of the sides. Either you sell above, or you sell below, or you sell at the same price. For that case, you say we are at break even. Right? So when you take a buy, the opposite one is a sell. If you're a trader, no trader wants to enter Euro USD trade and hold it for 2 years. And everybody's asking, what are you doing? You say, I'm trading. What are you trading? Euro USD. When did you enter this trade? 2019. Nobody wants to do that. You want to get out at one point in time. And if you are getting out, it's either you get out with a win or a loss. So your trade is not complete until there is an exit. Your trade is not complete. Your trade plan or your strategy is not complete if it doesn't tell you how you will get out and when you should get out and if you should get out at what point. If it doesn't tell you that, yes, it's recorded. If it doesn't tell you that, you don't have a strategy. You're a gambler. And I told us several times in this webinar what will happen to gamblers in this market. So you hear some people say that my stop loss is 20 pips and I'm targeting 30 pips. The question is how? How did you arrive at 30 pips as your stop loss? How did you arrive at 40 pips as your take profit? If you just took it haphazardly, then you are not trading, you are gambling. If you took it haphazardly, then you are not trading, you are gambling. Then it also means you didn't understand day one's lecture, which is risk. It means you are not taking your risks in a measured and a calculated way. For you to take your risks in a measured and calculated way, you need to know when to get out, how to get out, and if you are to get out under certain circumstances. Again, we cannot complete all of that today. Right? We are wrapping up now. Number 12, how price moves. This is where we wrap up for today. So price typically moves in two ways. It's either it goes up or it goes down. And sometimes it could go up and down very, very fast. And we call that consolidation. But it only moves in two ways, either going up or down. Right? Either goes up or down, you know, or goes up or down so fast, right? And I'll just draw that and we'll call it a wrap. So this is a situation where price is going up. For this, we say it is an uptrend. We say it is an uptrend. Or price could be coming down. For this case, we say this is a downtrend. Or price could be going up or down very fast. And then, sorry. And in this case, we say price is in a range. It's sitting inside a range. It isn't going anywhere too soon. It's just playing up and down. We say price is in a range. These are the type of movements we usually see in the market. Your strategy should help you, number one, identify if you're in a trend or if you're in a range, and it should tell you what type of trend you are in, and therefore tell you, answer all the other questions, the location and everything, right? So I'll stop here for today. I think we've done justice to my lecture note today. We'll continue tomorrow. And when we meet tomorrow, we'll be looking at HPLR. And in HPLR, we'll answer all the questions we asked here, right? Where are we in the market? Should we be buying at a discount or selling at a premium? What is our best location using past data? Using past data, which is the left-hand side of the chart, to determine what our best location should be. How should we be getting out, right? If you understand that, then you begin to understand a strategy. So that is it for day 2. I'll stop this recording right now, give room for just 3 questions, if any, and then we'll call it a wrap for today. Thank you.